Excel accounting practice problem. Bank reconciliation, month 1, part 2. Get ready because we're about to excel. Here we are in our Excel worksheet. In prior presentations, we put together the worksheet from a blank sheet. Now we're continuing to enter transactions into it. If you have access to it, there's 2 tabs on down below. There's the example tab and the practice tab. The practice tab starting out where we left off last time. The example tab in essence being an answer key. Let's take a look at it now. In prior presentations, we looked at the putting together of the bank reconciliation process, comparing the bank statement looking like this. This is our mock bank statement to the books, which is going to be our book balance here in the checking account. This is as of the second month, however, and we're first going to be reconciling the first month. If I go all the way to the right, then we have been adding our data. We copied, in essence, the general ledger from the first month. So we got our GL from the prior month. We got from the prior worksheet, which ends at the ending point of that period, which was the 88,645. And we constructed basically a worksheet that would be seen, or similar process that you would see to a worksheet that would be in a software system. This is kind of what you would expect in like a QuickBooks system and how the bank reconciliation would be constructed. It is not the actual reconciliation itself. It's how you determine what are going to be the items to create the bank reconciliation report. Now we're going to continue on and create the bank reconciliation report, and we'll also deal with that beginning balance issue we saw last time, which is quite common and something that you'll have to deal with both in accounting software and when doing this kind of process in Excel. Not a problem after doing the first month of reconciliation. Back to the practice tab. Let's hide some stuff. I'm going to hide from the skinny column Y all the way over to A. Right click. Let's hide that stuff. And then I'm going to go all the way to the right, which is where we've been constructing our information all the way on the right hand side. And so there we have it. There's our checking account that we've been putting together, and we basically went ticking and tying off the activity that's in our bank statement compared to our books, the bank's bank statement compared to our books. And so we tick and tied them off, and if we had the beginning number here and we matched everything out that is on our books and on the bank statement, then our ending balance would have to match, because we would just basically be reconciling the same little calculation up top. Beginning balance plus the additions minus the subtractions would give us to the ending balance. Our problem is that our beginning balance is different on the bank statement than it is on our books, because when we put this on our books, we used whatever the balance was that was in our prior system in the bank account in order to apply our beginning balance. And if we had any bank reconciliations, then we might have some outstanding checks and or deposits, in these case outstanding checks. So usually, oftentimes you can kind of see that. You could see that if you had bank reconciliations in the prior system. If you weren't doing bank reconciliations in the prior system, then it'll often wash out, and you'll be able to see it when you reconcile here. You're going to say, okay, there's the 30,000 different by the 5,000. I checked everything off and I couldn't find these two, which add up to 5,000, that being the difference, because they cleared in the current period, even though we wrote them last period, which was in the last accounting system. So that means that the beginning balance that we put in the books, that the 25,000, isn't actually the cleared balance. That's the balance that we had on the books that hadn't yet cleared at that point in time. 30,000 would be the balance that had been cleared, and then the difference, the reconciling item as of that beginning point, would be these two checks that hadn't been included. So how can I represent that then on my system so I can kind of see what happened from the starting point? Meaning I could just like leave it the way it is and these two kind of wash each other out. That problem kind of washes itself out, but I kind of like to show it here in the system. So what I would like to do is say, okay, I'm going to add the two checks down here and kind of imagine that I'm going to be putting the checks in the system as of the prior period, 12/30, the prior year, 2000, the last year, and then they'll roll in from December to January into equity if there were any income statement accounts affected. And that means that I can add the detail that will clear here, and then my beginning balance will actually be then the proper beginning balance of 30,000. So let's see what that would look like. So for example, I'd go down here. Now, if I was in an actual QuickBooks system or something like that, I might go into the prior period and add these accounts, add these items into the prior period as of December of the prior year, and then adjust my beginning balance to 30,000, the two transactions netting out. Here, I'm just going to show it on the bank reconciliation. So I'm going to add two columns here. I'm going to select these two rows here, not columns, right click and insert, and shift these cells down. And then I'm going to call this, let's call it 1231 in prior year, PY 1231, and say prior year. So these are as of the prior year. They're not going to be on my activity in the general ledger because we started as of January. These are on the books as of the prior year. And these will be those two amounts of the 1,000 and the 4,000. So I'm just going to put 1,000 and 4,000 there. And then if I add up my total down below, the total checks and decreases, I'm going to make sure to pick those two up so that we have our decreases, and there we have it. So that looks good. So now if I go back on over here, we've got the 30,000 at the start. Now that I've added these decreases here, I can change this to the 30,000. So we're kind of at the same point, right? That's why those two things washed out. I've got the decrease of the 5,000 here, and I was at 25,000. Now I go back, this should be 30,000, the amount that had cleared at the end of the prior period, which we're not looking at because that was in the prior accounting system. And then we had these that cleared in the current period that were outstanding as of 12/31 of the prior year. So now I'm kind of see how this ties out. You're saying, okay, there's the 30,000, and then we've got the additions 143.70 about, because we got rounding 143.71 on the additions 30, 143.71, and then the subtractions 111.664 doesn't quite match this item. Not due to these two. I can yellowify these two. These two are fine now. But due to these two down below, the 150 and the 15, and that's why we are off by the 165. Now we're off by the 165. Let's make this blue and bordered. Okay, so now before we make that adjustment, let's kind of take this and make the actual bank reconciliation as you would see it kind of in a textbook kind of format. Notice in accounting software, I couldn't reconcile until I fixed the difference, meaning entering the difference on the bank statement into our books. We'll do that next time, but now let's kind of see how we would put this in a book type of problem, how a book type of problem would represent this. So typically, you'd have two columns. I'm going to add a little bit more space. I'm going to put my cursor on column HJ and just scroll over to like all the way over here, right click and insert. So we got a little bit more room. All right, let's make this one a little bit smaller, make that a skinny. And then I'm going to say this is going to be the book balance, and we usually compare the book balance, making this a little bit larger too. Let's make this one a skinny. We're going to compare that to the bank balance. So we got the bank balance, and this is going to be the ending balances that we're looking at now, and we're going to reconcile the two of them. So on the book balance, the ending balance at the end of January is going to be this 88,811. That's where we left off at the end of January. And on the bank statement, the ending balance was the 61,241, 61,242, 61,242 about. Okay, so then we're gonna try to reconcile the two, and we're looking at the differences and trying to say, is that difference going to be something that is our issue on the book side or on the bank side? So the differences that we've got these two differences that are on the bank statement that are not on our books. If it's on the bank statement and not on our books, it's usually our problem, meaning we're going to have to add these to our books because the bank is usually correct. If the bank is not correct, then of course we're going to have to talk to the bank and see if we can get it corrected. But oftentimes that's the case. It's our problem. So we're going to say that those two are going to have to be included in our books. So I'm going to say we have the withdrawal. Let's say this. Let's say checks and decreases to try to categorize these. And then we've got the withdrawal and the service charges, which were, the withdrawal was 150 and 15. So that's going to give us the total. Let's leave a little bit of space. Total checks and decreases. And so there we have that. And then I'm going to make this a little bit larger. Let's put an indentation, alignment indent I'm going to sum those two up equals the sum. So that will give us, then I'll leave a little bit of space down here. Let's put it down here somewhere. Let's bring it all the way to 13. This will be the adjusted book balance. Now these adjustments we're actually going to have to enter into our system. So we started with the 88,811 minus the 165 that we don't have in our system that we're going to have to put in our system. And then on the bank side of things, we had, let's call this outstanding checks and decreases. Let's put a colon after that. And we're going to pick up all the stuff that we didn't check off over here. So everything that has not been greenified are now the items that we are on our books that aren't on the bank statement. We assume them to be outstanding, meaning we're correct. The bank statement just hasn't cleared them yet. We can verify that by checking the bank statement in the following months to see if these items have cleared. If they have, they're just timing differences, and that's what we're looking for really with the bank reconciliations. So we're going to say, all right, let's pick these up. We'll say, let's see if we can pick up like the date. We'll just do it by date over here. So these are the checks. So I'm not getting that deposit. I'm looking at the check, which is the 500. Let's see if I can format this. I'm going to format these in a date format, like this formatting. Let's do a format painter and bring over that date formatting like that. So we got 126. So 126 is going to be here. Let's hide some cells and make this a little bit easier on ourselves. Let's hide from this cell on over to this cell and hide. Right click and hide, putting these side by side. So there's the 126, and then let's make everything positive, flipping the sign, making that positive. Okay, so now we're going to say the next one is going to be the 126. I'm going to say negative to flip the sign of that 410. And then we had another one that we didn't pick up down here on the 130. I'm going to say negative of the 3572. And then we had another one down here, which was on 130, negative of the 1856, and then negative of the next one, which is the 130. Hold on a second. Not negative of the 130. And then negative of the 130. And then we're going to say equals the last one, the 200, and then negative of the 200 here. So these are all the ones that were decreases that we wrote that didn't clear the bank in January. So I'm going to leave a couple spaces in case we have any more. Let's bring it down. Let's bring it down to here maybe. And we'll call this then the total outstanding checks and decreases. Let's indent that. Let's put an indentation. Let's sum them up. So let's actually, I'll put them in the same column here. Let's sum them up equals the sum of these items. And then we're going to have then outstanding deposits. Outstanding deposits. Let's use the same formatting here. I'm going to format this, and then I think we only got one. So I'll do a couple cells here just in case we have any others. That's going to be the 125. So the 125, we just have that one right there. So that looks good, and so I don't need a subtotal. I'll just keep that as is since there's only one, and then we'll call that then the adjusted bank balance, which is going to be equal to the beginning number, and then the stuff that we know about that the bank doesn't, the outstanding checks minus the outstanding checks plus the outstanding deposits. So there we have it. So there we have those two. Now let's unhide these cells from HB to HM. Right click and unhide. So now if I compare these two, let's pull this one down. I'm going to grab that one, and pull it down here. So there we have it. So now you can see that we reconciled. If I look at the difference, there is no difference between the two. And so we've done our bank reconciliation. We know what the difference is between the ending bank balance and the ending book balance. But in order to know what that difference is, you got to find out what are the outstanding items. And to do that, you got to do this ticking and tying type of problem that's over here. Now, if you use accounting software, all you really do is this ticking and tying kind of process, and then the system can kind of put together the bank statement, which is in essence this report. However, most accounting software systems aren't going to you can't just leave these items over here. These items represent adjustments we need to make in our books, meaning we're recognizing that we were wrong on these items. Not really wrong in that we just didn't know about these items. We could have been wrong on some of them, but we didn't know about these items until we got the bank statement. We didn't know how much the bank charged us with, the service fees. Let's indent this until we got the bank statement. So now that we do know about them, if it was a QuickBooks system or some accounting system, we would have to enter them into our system before we reconcile. And that would leave us with just these ending balances here, which would be the bank reconciliation. So this side should be the bank reconciliation in essence after we adjust this side, which is the things that we need to fix because they were on the bank statement and correct and not in our books and therefore need to be included in our books, which is what we'll do next time. Let's go ahead and format this. I'm going to select these items and say, let's put the brackets and put some formatting there. And so there we have it. So we got our ending balances, tie out. We could put a double underline under these maybe, make it a little bit more fancy. So there we have that. Let's do a spell check just on these items. Did I misspell a bunch of stuff here? Deposited, deposit, outstanding, deposit. I think I just want no D. I'm not change. That's not too bad. That's pretty good. That's not like one word. That's a problem. So there we go. So next time we're going to go back in here and then we'll kind of do the adjustments for these items, which will eliminate this half of the bank reconciliation because we will have fixed. There won't be any errors on our side because we will fix them. These will go away. And then this will be our bank balance. And the book balance will then change to be the proper book balance after having made these adjustments.